Hello, this is Steve Malone with Compass of X. I hope you're doing well today and you're getting some good trades. I want to take a moment and look at the Aussie dollar and the New Zealand dollar. Both of them have had some extraordinary moves since June the 1st. The Aussie dollar's moved about 620 pips. The New Zealand dollar's moved about 535 pips over the last couple of weeks. Many in the marketplace are thinking that they're getting a little top heavy and the market may tap out and short sellers come in and we see a push back down. However, that might not be the case. So let's take a look at this a little bit more in detail. Let me give you the reasons why the market sees the Aussie and the New Zealand dollar continue to appreciate, and some levels that you might want to identify as potential turning points, or some levels that the market may look to take some profit on the potential continuation up in the Aussie and in the New Zealand dollar. Now, fundamentally, there are two reasons why both are moving up. First off, both are benefiting from expectations that the Federal Reserve may usher in QE3 due to lackluster economic reports here in the U.S. Now, I know some are saying, we're not going to have QE3. Things are getting a little bit better. Well, if we don't get QE3, we're going to get continuation of Operation Twist. And institutions around the world aren't interested in investing in something that is low yielding. If all things being equal, if the market's A-OK, perceived by the equity markets continue to rise up in the world, well, if that's the case, then firms are going to move out of low yielding currencies into higher yielding currencies. Case in point, the Aussie dollar right now, its interest rate is 3.5%, compared to the US dollar at 0.25%, or the yen at 0.1%, and the New Zealand dollar is 2.5%. So institutions around the world can basically sell the dollar, step into the Aussie or the New Zealand dollar, and take the differential on the interest rate and pocket that. Now, the second fundamental reason in the marketplace why both of these pairs are appreciating is due to the ongoing Eurozone sovereign debt crisis. Institutions, for the most part, are exiting Euro positions, and they're looking for another place to go. Well, not going to go to the US dollar, paying 0.25%. Oh, there's the Aussie dollar, paying 3.5%, and the New Zealand dollar, paying 2.5%. But hold on a sec. Those are a little high risk, I thought. Well, look at the market behind both of these currencies. Both of these currencies are commodity based. Look at the commodity market. As long as the commodity market continues to do well overall, then we can see continued appreciation in both the Aussie dollar and in the New Zealand dollar. Now, let's look at what the Traders Dynamic Index is telling us from an intraday perspective. From an intraday perspective, we're overbought in the New Zealand dollar. I would look for these three lines, the green, the red, and the yellow, to come together, to squeeze together, and then a possible turn and a move down. Same thing on the Aussie dollar, getting up here pretty high, above the 68. Usually it's an overbought situation, and we're looking for the market to turn. If nothing else, from profit taking. Well, how much profit taking, Dean? Well, let's look at this. Look at this whole move and identify the biggest pullback. Well, that's right here. So if I simply take a line from this high point to this low point, take that and move that over to the high that we have right now, that brings this down to about 160, 165 area on the Aussie dollar. Take a look at the Kiwi. Take a look at the New Zealand dollar. The biggest pullback right here from this top to this bottom here. Take that move, position it up here at the high. That puts us down to about 78.50 area. That would be the potential profit taking. Now, take a look at the Aussie dollar on a daily chart. On a daily chart, it doesn't necessarily point out that we're due for a turn just yet, looking at the Traders Dynamic Index. Traders Dynamic Index is turning to the upside. Now, the only caveat on this is usually when the green line gets so far away from the yellow line, we do expect the market to turn. And we've had a number of candles to the upside. Not including the doji here, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We could go another 3 days to the upside and challenge this 200 SMA. If we get above the 200 SMA sitting up here at 240, we're going to start getting in this range here, which could potentially see the Aussie get back up here into the 104 to 104.25 level. If you simply run a fib from the top to the bottom, you can see that we've broken the 618 and we're on our way up, potentially up here to the 786, which comes in at 102.81. The 88.6 comes in at 103.70. I would think that we would start looking for a potential hit on one of these two levels. If the 200 gives, look for the push to one of these two levels, then look for your retracement down under normal circumstances. If the 200 holds, then look for that normal profit taking as the market takes some profit off the table and then challenges that 200. Again, a classic break of the 200 gets the market to trade the other side. Taking a look at the New Zealand dollar, same situation, except in its case, strong move up, big move away from the yellow here. Do expect some movement back, but look up here, it's moved above the 200 SMA. In this case, running my fib from top to bottom, we can see it's also broke the 618, which is pretty much right where the 200 SMA is, and then we start looking for levels to go up. Now I point out about 3 levels to be aware of: the 80 mark, the 80.60, 81.20, and potentially 82.50. I do think though that the challenge in the market is going to be when we get up around that 786 or the 88.6 as we start challenging the range lows. Now here's a range low right at the 78.6 retracement level, 80.60. That might be the level where the market gets challenged to the upside and we start seeing some move back down. Back over in the Aussie dollar, there's a potential here of the 240, hit off the 240 and move back down. But we get above that 240 mark, I think we're on our way up to the 103 or the 104. Now, with all that being said, if things seem to be terrible in the marketplace and commodities aren't going well, always look for that safe haven play back into the dollar or back into the Japanese yen. If that happens, then that's going to fuel the short sellers stepping in to bring both of these down to common levels. So right now, from a profit-taking standpoint, if you're looking to sell up here at a high level, I expect the Aussie dollar to move back down here to around this 125, and the New Zealand dollar to potentially move back down to somewhere near the 78.50 level. Well, folks, this is Dean Malone with Compass FX. I hope some of the information I've shared with you about the Aussie dollar and the New Zealand dollar will help you in your trading. Y'all have a great day. Get some good trades. We'll talk to you next time. Bye-bye.